Hi everybody, Brian here, quantlabs.net. We are at 4:22 Eastern Standard Time, August 4th. We're going to talk about Blackrock, this Coinbase tie-up, and talk about each service and in detail so people know what's going on. All right, so if you haven't heard, I'll put it over to the official blog here on Coinbase. So let's talk about first Coinbase. With Coinbase here, Coinbase has been rumored to go near bankruptcy. Too high commission fees, not competitive. They did not segregate out their funds of their customers from their operations in terms of the funds. They were recommended or demanded by the SEC over this. The CEO, founder, Brian Armstrong, tried to hide behind it. And I had my own personal first-hand experience with Coinbase. It's pretty awful as a crypto exchange. But I can't say anything about the institutional. We know about the institutional, no institutional demand. But what they've done is Coinbase has tied up with Blackrock, their software Blackrock Aladdin. And I've got an article here that I'll go into detail about it. I'll put that in my blog in the description. And we'll talk about that. So right now, Coinbase was more traditionally for retail. Coinbase, they've got hundreds of coins. They're just not very good. The customer support doesn't even exist. It's just an awful exchange. And if you want my recommendation for the US, I would go with Kraken. But Coinbase, here we are. Now they have this thing called Prime, and it's really designed for institutional, and this is for custody as well as trading off of that, the custodial. So basically they've tied up the Aladdin, the Blackrock portfolio manager, and I didn't know, but the Aladdin has a lot more to it than just portfolio asset management. So what they've done is they got the Coinbase Prime situated with a lot of the coins out there, and this is for institutional. And we'll talk about the fees that they have charged on the Aladdin side. So you can now buy into Coinbase, from Aladdin. These are for institutional asset managers, traders, whatnot, and they can, when they use Aladdin in their back office at banks, hedge funds that use Aladdin from BlackRock, they can also now, as a new choice, be able to get into crypto on Coinbase. And that's how this is all working. Now, I'm not going to go into the real highlights of it, but people are going to go, what is Aladdin? All right, so this is Aladdin here, and right here on the BlackRock site. Okay, so for portfolio management, blah, 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 blah. Again, I'll put these in the links. But I'm sure a lot of you will want to know what Aladdin is. Aladdin is the backbone of BlackRock. Goldman Sachs has their own system as well. I'm not sure if they still use it, the SecDB, which was their internal database for risk management at Goldman Sachs. And I think a lot of banks will have their own proprietary technology for risk and portfolio management, and Goldman Sachs has their own SecDB if it's still around. Aladdin is used a lot by various banks and pension funds and whatnot. But this is the whole history here. So if you go to this website, cognitivefinance.ai, you can get the history of BlackRock and Larry Fink's idea of it, why he created it, blah, 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 and how it started. So they're a $9.5 trillion company, BlackRock. So they're something not to mess around with. If you know what I do with the ETF, last week I said I'm not seeing a lot of the iShares, which are a part of BlackRock. So here's the history, how BlackRock got iShares. So Barclays, global investor, in 2009 were in trouble. So BlackRock took them over, $13.5 billion, and that included, because their assets under management doubled in the ETF space because BGI owned iShares. So BlackRock is behind the iShares. They're one of the biggest iShares provider, and they're huge. So it was growing, as you can see here, $1.4 trillion industry back then. Now, I have no idea, but it's a $9-10 trillion business for BlackRock assets under management. So that's one of the big things. So there's some really good details here on Aladdin. Now, in terms of the cost, if you were ever to wanted to use it, I think JP Morgan was one of the ones that were one of the first real big users of it, and they started paying annually $1.5 million for integration plus an annual fee, and that got up to $5.3 million. So that's how big of an account you need, or fees you need, to pay out to BlackRock for this thing. So blah blah blah, on and on it goes. So it started to grow. I didn't know this. I thought it was just purely portfolio management, but now it does trade execution, analysis and risk management, and investment operations. So a lot of companies started adding to it. They call it the monolith, which it sounds like it is. They've got Apple, Microsoft, Alphabet, Google using it for their corporate treasury investment portfolios. So that's who's using it. It's that big. And Financial Times estimates that over $21 trillion sit on the platform, just a third of its 240 clients. That's huge. Then the rest of the article goes on about financial risk, what if they get hacked, blah, 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 blah. And when they say Larry Fink could run the world, the founder of BlackRock, this is another way he can do it, plus what he's got and owns in the world of ETFs via the iShares. Very, very good article. Again, that's at cognitivefinance.ai. Title Aladdin and the Genius that is Larry Fink, who's the founder of BlackRock. So you can see here I've got numerous articles further out. I'll put these in my blog. A couple of other interesting things about this business about Coinbase: 200 assets, custody more than 300 assets. I think that might be coins and tokens. This is huge for Coinbase. It's good for the overall space of crypto as well. Now, institutional investors have a much easier way to get into crypto. So overall, we can, I think, personally benefit from it. Also, right here, $8.5 trillion assets under management after BlackRock launched a blockchain ETF. So I track that as one of my crypto sectors in the ETF. So it's all negative right now. So moving on. And there's some other interesting tidbits here about Coinbase now. So Bitcoinist, let's see if there's anything in here that's unique. There was some very good articles on stats on Coinbase, which kind of shocked me. And one of them was the Coinbase, right here. Okay, Coinbase custody reserves the right to hold the assets on behalf of its clients in cold storage with an insurance up to $320 million. So this is why I don't like Coinbase, okay? Because they're not, okay, you compare this to Kraken. Kraken has proof of reserve to become a bank, a fully fledged bank out of Wyoming, Cheyenne, Wyoming. I'm not sure where they're at, but apparently they're getting routing numbers from the Federal Reserve to be an official bank. So Kraken is under much tighter regulation now. So for every dollar you put into Kraken, there's a regulatory obligation to cover every dollar that's put into Kraken. Here with Coinbase, you only have up to 320 million across all their clientele, which is in my mind nothing. And because with Kraken, that's what that proof of reserve is, because they can prove that whatever is in the client fund for Kraken, they can cover that. That's why they've got that audit done. That's one of the big things about Kraken. That's why I like Kraken. I don't work for Kraken, but just to give you an idea of how much they can cover in the insurance, and that's very important to know about Coinbase, among other things I posted in the past. The stocks went up, yay, that was all today. So this is a big deal because it enables, as I said, institutions to buy into crypto, namely the Bitcoin, Ethereum, and all that. So here's some more interesting tidbits. So cold storage is insured up to 320 million. Coinbase can transfer funds between wallets. They can only do so internally, which means that transferring Bitcoins off the platform currently does not seem to be an option. And that to me is because of regulatory. Okay, that's the direction they're going, probably with regulation in the US, and the rest of the world most likely follow whatever the regulatory is in the US. Blackrock serves over 1,600 institutions across UK, US, Canada. Investment managers' interest was apparent in February as reports on an imminent entrance into the ecosystem started to emerge. They see all the flow that everyone else is getting and want to start making some money from this. Okay, so that's the institutional point of view. Let's see if there's anything else I'm looking for of interest. And but this is really important to understand with the different services available from BlackRock and Coinbase Prime and the Aladdin. So hopefully you'll see all of this in these articles. I said I'll put them up on my blog, quantlabs.net. So I think we've covered it all. All right, so if you like that info, I do track, as I said, the ETFs, namely including crypto ETFs, among pretty well everything else. I track that through Interactive Brokers, over 900 ETFs. So you can get that here, quantlabs.net/ETF. Get in on how I do it, and Yeah, it's quantlabs.net/ETF. Name, email, all your data is not sold or released. So sign up with confidence. All right, so thanks for watching. Have a good day.